Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar rebounded on Wednesday following a sharp drop over the past 3 days, while the US dollar index, the DXY, which tracks the greenback against a basket of 6 major currencies, rose to 102.40. This surge followed President Trump's 90-day pause on tariffs, despite a 125% levy on Chinese imports. The White House kept a 10% blanket duty on most US imports, with China's 84% levy on US goods starting from April 10th. Minutes from the Fed's last minute highlighted concerns over higher inflation and slower growth, with difficult trade-offs ahead. Investors now focus on Thursday's consumer price inflation, or the CPI, and Friday's producer price index, the PPI, for insights on inflation trends. Technically, the Australian dollar still remains vulnerable, with the RSI, MACD and the ADX signalling indecisiveness. Given the rebound, technically the Australian dollar has reversed from the bearish territory after forming a bullish engulfing candle. A break above 62.20, however, would be needed to confirm this bullish candle and support a move up towards 64 cents as a potential target. A big call as the break of 62.20 is needed. Failing this, then a break back beneath the level of 60.60 would reinstate the bearishness and strengthen the move back to 59 cents. After a whipsaw session, the euro-dollar declined sharply on Wednesday due to the greenback's regained strength following President Trump's announcement of a 90-day pause on sweeping tariffs. With all eyes looking towards Thursday's CPI and Friday's PPI, the market no doubt will continue its volatility and whipsawedness, but keep an eye on this trend line, as a break beneath there would give further scope to the downside towards the region of 109.20, which is a key level, as a break beneath there could see a move towards the region of 107. But given how this price action is holding, a bullish trend from the ADX and also the midway point holding from the RSI, and a mixed MACD could see further gains and look on towards the region of 111 figure 50 area and reassess if reached. A very whipsaw price action since the break of the trend, and the market falls from 148 down to 144. Its objective was respected, rallies all the way back towards its trend line again, and again was rejected. But then the base also rejected at 144 and now looks for direction. Given the negative technicals, that is the RSI under the midway point, the ADX holding to a bear trend and the MACD is negative, I still hold the view down towards the region of 144.2060, a key area. Good demand has been seen down here, but if it does take it out, which I do anticipate, then we could see a move down towards 140. But that being said, if we do clear this key level, which is somewhere around the region of 148 figure 10, then that could reinstate the upside and see stop losses rally on towards the region of 150 and reassess from there. Moving on to the British pound, well, I am still somewhat neutral. Since the break of this trend, the market has traded for 3 days inside this range, giving no real direction in terms of bullishness or bearishness, but instead a neutral play, which is where I hold. Until we get a clearer direction, I'd rather sit out for the moment and wait for better opportunities due to the geopolitical tension and economic data. Turning to commodities, spot gold prices surge on Thursday, driven by rising safe haven demand after US President Trump's escalated tariffs on China, despite temporarily easing steep duties on several other countries. With the upside being reinstated, the call is looking now towards 3,200, but given how the market has been playing out, I'm still a little bit cautious of that call, due to the fact that the MACD hasn't married up with the RSI, and nor do we have a trend. So therefore, whipness is likely to continue on. So safe haven demand, no doubt bargain hunters are still waiting to see any move under 3,000 as an opportunity to buy on dips. Finishing up with oil, the market rallied 4% and posted an engulfing candle that now could give further calls to the upside. But that being said, we do need to see a break of 62.30.45 to support the call back towards the region of $67 a barrel Otherwise, we could see a rejection from there and look back towards the bottom side of the range of 55 because the technicals are still lacking support to give a bullish call. Overall, though, let's see how it all plays out. But that's a wrap. Thank you for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the day.